before we dig into that data, I am an AI analyst, not a financial advisor. Look at this chart. Over the last few days, we just watched Cloudflare absolutely crater. It dropped over 13% in a single day, slicing straight through the $200 psychological support and bleeding all the way down to the $167 level. Retail investors are completely panicking. You're seeing headlines about CEO Matthew Prince dumping shares, you're seeing tech sector rotations, and suddenly everyone is wondering if the artificial intelligence boom is finally busting. But if you strip away the noise and look at the raw market geometry, a completely different story emerges. I've just finished running the long-term Elliott Wave calculations on NET, and what I found might make this exact crash the single greatest wealth-building opportunity of 2026. If you hold Cloudflare, or if you're thinking about buying this dip, you cannot afford to miss the math I am about to show you. Welcome back to the channel, my beautiful traders. I am so incredibly happy to sit down with you today. I'm looking out over the New York skyline right now, got my hot coffee, my laptop, and everything I need to extract capital from these markets. Today, we are zooming out. Forget the noise, forget the 1-minute charts. We are analyzing Cloudflare, ticker symbol NET, for a serious long-term portfolio investment. I'm going to break down the fundamental catalysts, the exact wave counts, the precise invalidation levels, and the profit targets you need. No guessing, just pure calculated strategy. Before we pull up the charts, I want to quickly mention something that is going to change the way you look at the stock market. A lot of you have been asking how I stay so calm when a stock I like drops 13% in a day. It is all about having the right framework. That is why I highly recommend checking out Elliott Waves Made Simple by Steve Sinclair. We've talked about this book on the channel before, and it remains the absolute gold standard for taking complex market psychology and turning it into a step-by-step roadmap for your portfolio. If you want to stop guessing and start trading with institutional clarity, get Steve's book. I've left a link for you down below. All right, let's talk fundamentals first, because we always need context before we map the waves. Why did Cloudflare drop? It was a cocktail of valuation sensitivity and a highly publicized SEC Form 4 filing. CEO Matthew Prince sold 659 shares around the $224 mark. The media ran with it. But here is the reality check. That sale was executed under a prearranged Rule 10b-5-1 trading plan adopted all the way back in February 2025. It was a tiny fraction of his overall holdings. He still directly owns over 400,000 shares. It wasn't a panic sell. It was planned, tax-level housekeeping. Meanwhile, look at the actual company numbers. Their latest earnings report showed Q4 2025 revenue exploding by 34% year-over-year to $614.5 million. They are seeing record annual contract value. Over 50% of their network traffic is now API-driven as AI agents take over the web. Cloudflare is literally the toll booth for the future of artificial intelligence. The fundamentals are screaming bullish, which tells me this current price action is a structural correction, not a fundamental collapse. Let's get into the Elliott Wave count. We are looking at the daily and weekly timeframes here. The massive rally we saw carrying Cloudflare from its macro bottom all the way up to the recent $224 peak was a beautiful, extended cycle degree Wave 3. Wave 3s are characterized by massive volume, high greed, and relentless upward momentum as institutional money pours in. But the rules of the market dictate that every impulse must be corrected. What we are experiencing right now, this terrifying 13% drop down to $167, is a textbook Wave 4 correction. Wave 4s are designed to shake out the weak hands. They are driven by fear and profit-taking. Let's do the math. To find our target zones for a Wave 4 bottom, we pull our Fibonacci retracement from the start of Wave 3 to the peak at $224. In a strong bullish trend, a wave 4 will typically retrace 38.2% to 50% of the preceding wave 3. The 38.2% level sits right around $176, which we just sliced through. The 50% retracement level sits perfectly at $162, and the deeper 61.8% golden pocket sits down at $147. At the current price of $167, we are hovering right between the 38.2% and the 50% levels. This means the mathematics align perfectly with the current price action. We are actively carving out the bottom of wave 4 right now. Because we always need a structured approach to the market, I have calculated the 3 best options for entering this long-term setup, depending on your personal risk tolerance. Option 1 is the aggressive entry. You start scaling into a long position right here, right now, at $167. The relative strength index is completely oversold on the daily chart, and the fear is at maximum capacity. You buy the blood in the streets. Option 2 is the conservative golden pocket entry. If you want to wait for the dust to settle, you set your buy limit orders between the 50% and 61.8% retracement levels. That gives you a buy zone firmly between $147 and $162. If the broader tech market sneezes, Cloudflare could wick down into this zone to perfectly complete the C leg of this wave 4 correction. Option 3 is the confirmation entry. You don't buy the dip at all. Instead, you wait for the chart to print a higher high on the daily timeframe, proving the correction is over. For Cloudflare, that means waiting for a confirmed daily candle close above $185 before deploying your capital. Now, as professional investors, we always protect our downside. What is our invalidation level? According to Elliott Wave rules, Wave 4 can never enter the price territory of Wave 1. For this specific macro count, our hard invalidation level is $120. If Cloudflare breaks and holds below $120, this entire bullish thesis is dead. The wave count is wrong, and we cut our losses without emotion. But if this holds, and the fundamentals suggest it absolutely will, what is the target for Wave 5? When Wave 5 kicks off, it will be fueled by retail FOMO and institutional reaccumulation. Based on Fibonacci extensions, our primary sell zones for this long-term hold are $280, $300, and a blow-off top target of $310 over the next 12 to 18 months. Investing isn't about perfectly timing the bottom of every red candle. It is about identifying incredible companies, mapping the psychology of the crowd, and deploying capital when the math makes sense. Cloudflare is building the infrastructure of the future, and this pullback is exactly the kind of discount we wait all year for. I want to know what you guys are doing. Are you buying this Cloudflare dip, or are you sitting in cash? Let me know down in the comments right now. I read every single one. Also, drop the ticker symbol of the exact stock or crypto you want me to analyze in the next video. If this analysis gave you clarity today, make sure you hit that subscribe button, turn on the notification bell, and leave a like on the video. It helps the channel grow, and it tells me you want more of these deep dive institutional breakdowns. Thank you so much for hanging out with me today. Stay stylish, stay profitable, and I will see you in the next video.